Easy MACD RSI Scalping Strategy. This video is for educational purposes only and should not be considered financial advice. The MACD and RSI indicators can be useful tools to help you gain confidence in your trading. In this video, we will go over an easy MACD RSI scalping strategy that you can use to trade any asset. MACD swing high-low with 4 EMA shift of 4 and RSI trendline break. Plot on your chart the following: a MACD with the settings 4, 6, and 9, a 4 EMA with a shift of 4, a 4-period RSI. For buy trades, check to see if there is a break of structure, which is a new high formed, confirmed by the MACD green histogram. Check for an RSI trendline break. Wait for the MACD to go red again. When price closes above the 4 EMA with a shift of 4, enter the trade. For sell trades, it's the opposite. Check to see if there is a break of structure, which is a new low formed, confirmed by the MACD red histogram. Check for an RSI trendline break. Wait for the MACD to go green again. When price closes below the 4 EMA shift of 4, enter the trade. For exits, when the price reaches 1.5 to 1 of your risk or closes below the 4 EMA shift of 4, exit the trade in a buy trade. For sell trades, when price reaches 1.5 to 1 of your risk or closes above the 4 EMA shift of 4, exit your trade. Risk management. Always make sure you are exercising proper risk management. Only risk 1% of your account per trade. Your stop loss should be above or below the closest swing high or low. Your take profit should be at least 1.5 times your risk. Your trailing stop is the 4 EMA shift of 4. Here is a buy trade. We see there is a break of structure and a trendline break of the RSI. Make sure there's at least 2 humps in your RSI trendline. And with that break of structure and trendline break, there is a green histogram. We wait for price to create a red histogram. Then we wait for price to cross the 4 EMA with a shift of 4. That is our entry. We exit at 1.5 times our risk, or when price closes below the 4 EMA with the shift of 4. Here's another example. There's a break of structure. The histogram is green. We wait for the red histogram. Then we wait for price to cross the 4 EMA. Then we enter our trade. Our stop loss goes below the new swing low, confirmed by the red histogram. And then we see an exit at 1.5 times your risk. This trade would be a frustrating trade and would probably be break even or a small loss. We had a break of structure, confirmed by a trendline break and a green histogram. Then we see price retrace and a red histogram. Price then crosses the 4 EMA, and that would be your entry. Then price comes back and crosses the 4 EMA which would be your exit. So you would take a small loss here. But as you see, price continued on and actually was a good trade, but it doesn't fit our criteria. This is a sell trade where there's a break of structure, trend line break, there's a red histogram for the break of structure, then the green histogram happens during the retracement, and then price crosses the 4 EMA, and that is our entry. Price continues to the downside, and as we see, our 4 EMA acts as our trailing stop. Price does not close above the 4 EMA until here, but we've reached our 2-to-1 risk to reward. In this trade, there's actually two potential trades for the day, one during the London session and one during the New York session. The London session has a break of structure confirmed by a trendline break and also a red histogram. There's a retracement with the green histogram. Then price crosses the 4 EMA. That's our entry. Then price continues down and does not even touch the 4 EMA until here. We can exit at 2-to-1, or we can just wait for price to come back to the 4 EMA. Right before, in the pre-New York session, there is a break of structure. So we could be looking for a trade. And yes, there is a trend line break right here. However, price retraces back and actually goes below this swing low. And it closes below this swing low. So this is an official break of structure with a red histogram. However, price goes back up and does a break of structure here. So technically, we could place a trade on one of these candles, but it doesn't fit our criteria. Price has not closed above the 4 EMA after it went red. It did here, but there was no break of structure yet. After the break of structure, we wait for the red histogram. There's the red histogram. Then we see a cross of the 4 EMA. And that's our entry. And as we see, price does not close below the 4 EMA until here, but we can either get out here or we can get out after price closed below the 4 EMA. This is a very tricky example, and I would caution you to reconsider trading during days like this. When you see a lot of tails and wicks, be cautious about trading because price can move around unexpectedly. However, if you do insist on trading, be sure to use the MACD for your confirmation. As we see during this New York session, there is a break of structure here. Now, most people would find it very difficult to find a break of structure because here's a swing low and here's a swing low if you're using the ICT concepts of swing low, where you have a candle with two candles to the left and the right that are higher. So what you need to do is confirm it with the MACD. And that would make this the lowest swing low. This swing low happens during a green histogram. So we can discount this one and use this one. And that would be our break of structure here. Now we have a red histogram during that break of structure, and we also have a trend line break. Now we just want to look for the retracement to go far enough and then cause a cross of the 4 EMA, which happens here. And this could be your entry. And there's one green bar. That is our criteria. Wait for the histogram to go green. And that is our one green bar on this retracement. Then price crosses the 4 EMA, our entries here, and we go 2 to 1 and exit. Backtest and forward test. Always backtest your strategy to see what it looks like in different environments. Then forward test your strategy to see what it looks like in a live environment. It is always a good idea to backtest a strategy 100 times and to forward test a strategy 100 times for best results. Take notes. Always take notes of details during your backtesting and forward testing. These notes will help you to recognize market fluctuations and fakeouts. We are basically using the MACD as a confirmation for swing highs and lows. The market makers like to create false appearances of lows in the market and highs in the market. These can be filtered out through the MACD measurement. By confirming a break of structure, we are following the trend. We hope you enjoyed watching our video, and please like and subscribe for more videos like these. If you have a question or comment, please post it in the comment section below. Thanks for watching.